Hello traders, in this lesson we will talk about support and resistance. We are still in the second module, a part of the course intended for beginners in the Fibonacci trading. Until now we have discussed Fibonacci trading rules, Fibonacci retracement and extension levels, which levels are used for trading setup, which for setting profit targets. But in essence, what do these levels represent? In simple terms, Fibonacci retracement and extension levels represents levels of support and resistance. So in this lesson we will talk about support and resistance. I believe that many of you already know this, but if some of these terms are still not clear to you, now we will explain them. It is very important that you know this. With this lesson and the next one, I want to draw your attention to the fact that there are a significant difference between the support and resistance that we receive from Fibonacci in relation to other ways of determining support and resistance. So let's see what this is all about. Okay, first, what is support or the level of support on the graphic? Support represents a zone below the current price from which the traders consider that the price will start to rise. All professional traders who believe that the price of, for example, the euro-dollar currency pair will grow, they never enter the buy position easily, but they wait for the price to decline into the support zone they have determined based on their analysis, and then they enter the buy trade. Since different traders use different tools to determine support and resistance and have different perceptions about the direction of the price movement, levels of support and resistance can be found at different levels. For example, I think that the price will rise for example, this level. It does not mean that all traders think so. The support zone is important for traders for two reasons. The first is to find the level at which they will open the buy position, and the second important reason is that stop loss is placed below the support zone. Okay, for traders, resistance represents a certain zone above the current price from which traders considered the price will start to decline. So in the zone of resistance, traders open their sell trades, and above that zone they set stop loss. To determine these levels of support and resistance, traders use a variety of technical analysis tools and all possible information they have about a particular financial instrument. Success in determining these levels means success in trading. You will find out in the continuation of the course how these levels are more precisely determined on the graphic with the help of Fibonacci and other tools. Okay, let's continue. Traders often use the previous lows and highs to determine support and resistance. For example, when we notice that the price often bounces from approximately the same level, then we can mark that zone and say that is a support zone, in this case because the zone is below the current price. If the price enters the zone, traders consider that the price will bounce off and continue to rise. But if the price still breaches this zone, then that same support zone becomes a zone of resistance from which we expect the price will bounce off if it approaches it again and continues to decline. Trend lines are also very popular for determining the levels of support and resistance. When the price is bounced several times from the same line, we believe that this trend will continue. In this case, it is the resistance line from which we expect reflection and decline. When the price breaches this trend line, then it becomes a support line from which we expect bounce and growth if the price approaches that line again. So what we have concluded is that lines or support areas, once breached, becomes zone of resistance, and likewise, once breached, the zone of resistance became support zone. This is the basic rule that applies to support and resistance. However, when we define support and resistance with Fibonacci, this rule is invalid. We'll explain it all in the next lesson. See you.